The origins of money, barter systems, and the emergence of money. Before the invention of money, economies operated on barter systems where goods and services were exchanged directly. However, barter had limitations, notably the double coincidence of wants, where two parties each desire what the other offers. To overcome this, societies began using commodity money, items with intrinsic value like cattle, salt, or grains, as mediums of exchange. Metal coins and standardization. Around 600 BCE, the Lydians in present-day Turkey minted the first standardized coins made of electrum, a natural alloy of gold and silver. This innovation facilitated trade by providing a uniform and widely accepted medium of exchange. Other civilizations, including the Greeks and Romans, adopted and refined coinage systems, enhancing economic interactions across regions. The rise of banking, ancient banking practices. Banking activities trace back to ancient Mesopotamia around 2000 BCE, where temples and palaces provided loans to farmers and traders, accepting deposits of grain and precious metals. In ancient Rome, various officials, such as argentari, money changers, and mensari, public bankers, facilitated financial transactions, including currency exchange and lending. These early banking systems laid the groundwork for more sophisticated financial institutions. Medieval banking innovations. During the Middle Ages, Italian city-states like Florence and Venice became centers of banking innovation. Institutions such as the Medici Bank introduced double-entry bookkeeping, enhancing financial record-keeping and accountability. These banks provided services like currency exchange, loans, and the issuance of promissory notes, facilitating commerce across Europe. The evolution of paper money. Chinese innovations. China pioneered the use of paper money during the Tang Dynasty, 7th to 10th centuries, with widespread adoption under the Song Dynasty. These notes, known as jiaozi, were initially backed by precious metals but eventually became fiat currency. The convenience of paper money revolutionized trade and influenced monetary systems globally. European adoption. In Europe, paper money emerged in the 17th century, with Sweden's Stockholm's Banco issuing the continent's first banknotes in 1661. The Bank of England, established in 1694, followed suit, issuing notes to finance government debt. These developments marked a shift towards modern monetary systems. Central banking and financial regulation. Establishment of central banks. Central banks originated to manage national currencies and stabilize economies. The Bank of England served as a model, influencing the creation of other central banks, such as the Bank of France, 1800, and the Federal Reserve System in the United States, 1913. These institutions regulate money supply, oversee monetary policy, and act as lenders of last resort. Regulatory frameworks. Financial crises prompted the development of regulatory frameworks to ensure stability. In the U.S., the National Bank Acts of 1863 and 1864 established a system of nationally chartered banks and a uniform national currency. Later, the Glass-Steagall Act of 1933 separated commercial and investment banking to reduce systemic risk. Modern banking and digital transformation. Technological advancements. The late 20th and early 21st centuries witnessed significant technological advancements in banking. The rise of the internet led to online banking, enabling customers to conduct transactions remotely. Automated teller machines, ATMs, mobile banking apps, and digital payment systems further revolutionized financial services. Cryptocurrencies and decentralized finance. The introduction of Bitcoin in 2009 marked the advent of cryptocurrencies, digital assets using blockchain technology to enable decentralized transactions. These innovations challenge traditional banking by offering alternative means of value transfer and storage, prompting discussions on regulation and the future of money. Conclusion. The history of money and banking reflects humanity's continuous efforts to facilitate trade, manage resources, and adapt to changing economic landscapes. From barter systems to digital currencies, financial institutions have evolved to meet the needs of societies, underscoring the dynamic nature of economic development.